Phil Muscatello and Finpods are authorised reps of Money Sherpa. The information in this podcast is general in nature and doesn't take into account your personal situation. Shares for beginners. Weekend Watchlist.
G'day and welcome back to Shares for Beginners Weekend Watchlist, where we take a close look at an individual company that you may wish to consider for your watchlist. It's not a recommendation to buy, but a way for you to discover valuable information about companies listed on the ASX. Joining me today is Paul Donoghue, Company Monitor with the Australian Shareholders Association, and we're talking BOQ Limited, ASX code BOQ. G'day, Paul.
Hi, Phil, and thanks for the opportunity to chat today.
No, thanks for coming on and talking about BOQ. It's an interesting one because banks are all banks here in Australia, aren't they? But seems to be a little bit of difference with this, which we'll be covering in the podcast. So can you describe the difference between the big four banks and Bank of Queensland?
Yes, so Australia has a long history of second-tier banks outside the big four. CommBank, Westpac, NAB and ANZ, they're not everything. Most of the second-tier banks were regional banks such as Bank of Queensland or Bendigo Bank. And it's really hard for these banks to compete with the big guys. The main reason is
they're rapidly disappearing, aren't they?
They are, yeah.
So many have closed down, or they get acquired really by the bigger banks, don't they, usually?
Correct. And Suncorp's a good example of that, with ANZ snapping up Suncorp Bank quite recently. And the main reason they can't compete is it costs them a lot more to access the funds they need to loan out. So banking's a scale industry, so the smaller banks don't have the same economies of scale. Their funds cost more, and the cost of complying with regulation is just disproportionate to their size. So it's really hard to be a small bank in Australia.
I noticed in one of the reports that I read that you'd authored, there was the situation a couple of years ago where there was capital requirements, I think $119 billion across the whole industry, and this particularly impacted Bank of Queensland, didn't it?
It did, because they don't have the same deposit bank base of other banks, so it's hard for them to attract deposits, and they can't borrow as cheaply. So counterintuitively, there was this weird period during the pandemic when the Reserve Bank loaned money to banks at a really cheap rate, and that leveled the playing field for a while, but those days are over and it's back to competing commercially for Bank of Queensland.
And part of the strategy was offering great interest rates so that they could get capital in, didn't they?
Correct, yeah. And it's an expensive game to play because your net interest margin, which is the main way banks make money, i.e. you borrow money at a certain rate from your depositors and you can lend it out at a higher rate, that margin gets squished. So it's offering higher rates for depositors just means everyone else copies you, and there's no winner in that except for the people who have the money in the bank.
Yeah, it was funny because recently opened a BOQ account and they've got a great interest rate. I don't want to make an ad here for Bank of Queensland, but it's incredible the rate that they're offering for basically what should be a term deposit rate.
Yeah. It's a good time to have money in the bank at the moment, a bad time to be a borrower. If you've got a home loan, your rates have gone up, but that's good for depositors.
So Bank of Queensland specialises in business banking and in particular industries as well. What do they specialise in servicing?
I think that in the past it was a bit of everything, and they're trying to get more focused. So they bought something called ME Bank a while ago, which was started by industry super funds to focus on members. It had no branches, so online only, and that's a key part of their offering now. The other part of it is their branch network where you can walk in and talk to a banker, and as you say, that's pivoting towards business lending. So the small end of town, not big companies, more small businesses with complex financial needs that really benefit from a face-to-face relationship with a banker. So you can see that Bank of Queensland's strategy is emerging in two parts. There's an online-only part of it, targeting people who are happy just to deal on the internet rather than going to a bank, and then the small business side with the branch network for those who want to have a face-to-face experience.
And they're particularly focused on the agricultural sector and also things like doctors and vets and those kind of small businesses as well.
That's a good point. They've got a few niches that they target, and apparently medical is one of those, and a lot of doctors, dentists and specialists bank with them from their university days right through, and then when they start their own practice, they can approach Bank of Queensland and speak to someone who understands the medical industry and knows the sort of unique requirements they're going to have for equipment finance and things like that to outfit their business.
It's pretty amazing, though, isn't it, that you would have unique requirements from a bank? Because banks, my experience with the big banks is that they don't have any understanding of particular businesses at all, whereas someone like BOQ seems to feel very important about this being part of their strategy.
Yeah, it is. And I suppose they're trying to find a way they can compete with the big banks. They can't go head-to-head in a war for just simple, home loans or for term deposits and things like that. They're going to come out second best in that. So by finding a niche where they can have a point of difference, it does make sense. But it's interesting that they've targeted agriculture and the medical industry.
Yeah, no, it is. At this year's AGM, the ASA asked questions about the change to the branch ownership model, technology transformation, and the remuneration report. Run us through those.
One thing worth mentioning about this year's AGM was much more upbeat than last year. Last year was all doom and gloom, and nobody seemed happy to be there. This year, the board acknowledged the last 2 years have been challenging, but they were much more optimistic. And we asked questions on a few different topics. As you say, the technology transformation, specifically, how far through that process are they? It's been going for like 4 years now, and it seems like there's a few more years to go before they're finished. So we're just trying to get some clarity on that, and that's been a hard thing to pin down exactly. We also took the opportunity to quiz some of the directors who are seeking re-election. We asked about the workload of one of them who has a number of different positions, and also we talked about the learnings the other director had brought with her from her other directorships, where she was on the board at Crown Resorts and PwC, so two organisations that are no stranger to scandal, shall we say.
So the technology transformation, was that part of the upbeat mood this year as opposed to the downbeat mood last year?
Yeah, I think so, because they're starting to make progress. So they announced this transformation in 2020, and they knew it was going to be multiple years, and they're finally starting to get something to show for it. So they've got what they call the digital bank. That's largely complete. It's a cloud-based banking platform, and they've got new internet banking and mobile banking solutions to deliver services to their customers. This year they were talking about something digital mortgage, which is an online way of applying for a mortgage. You don't need to visit a branch, and it takes you through the entire end-to-end process. And I think they said it eliminates something like 17 handoffs. So you can imagine how that makes them more efficient in opening up a new mortgage. So all that sounds good, but the point I was trying to make at the AGM is that putting the new systems in place isn't the end goal. The end goal is moving all your existing customers and their accounts to those new systems, and they're not that far through that process yet. They're making good progress, but there's still a lot of work to do. And until they do that, they can't decommission the old systems. They've got to maintain 2 technology stacks. That's very expensive, and it's not a great customer experience if you've got to access your accounts in 2 different ways. So I think until they get to the end of the tunnel, there is a lot at the end of the tunnel, but until they get there, there's going to be a lot of work and cost for Bank of Queensland.
So we talked about the franchise model. That was the other thing that you were focusing on. Is that the idea that branches are franchises and they're phasing that kind of system out?
Yeah, correct. So for about 20 years now, Bank of Queensland's run this interesting franchise ownership model for their branch network, and what they call an owner-manager. You own their branch and they run it like a semi-independent small business. So I think of it as like the baker's delight of the banking world. So they're individual franchises, and that worked well for about 2 decades, but it's all about to change. So Bank of Queensland announced earlier this year that all 114 of those owner-managed branches will be bought back off their current owners and run as corporate branches. And the rationale for that, according to Bank of Queensland, is the model just doesn't work anymore, not for them and not for the owner-managers. It's no secret that branch transactions are in decline. Most things are done online, although some people love to go into their branch. The facts are less than 1% of transactions are done face-to-face, and as a result, you've still got the cost base and your margins are shrinking, so it's becoming less cost-effective for Bank of Queensland and the franchisees. The real driver, I think, is control over the branch network. So without control over it, Bank of Queensland can't optimise it the way they want. So some of the examples they gave us, there's some locations with multiple BOQ branches quite close together, and they'd like to rationalise that, maybe replace them with a single service centre. So that makes sense, but not all owner-managers are happy with that new strategy, and there's quite a few of them that are currently in a dispute with Bank of Queensland about it.
And ultimately, will it impact the bottom line significantly?
Well, Bank of Queensland say it will be more cost effective, but there's still quite a big cost in implementing it. I think it was 115 to 125 million, something in that ballpark. So that's a big chunk of money, and it will take them a while to recoup that cost, even if they do have a more cost-effective base to go forwards with.
The big topic at last year's AGM was the court-enforceable undertakings with APRA and AUSTRAC. Can you tell us about the shortcomings in the risk framework that led to this and how BOQ have responded?
So Australia's got two main banking regulators, and last year BOQ managed to upset both of them. Primary one, APRA, their role is to promote stability in the financial system, and it regulates banks to make sure they're operating effectively. AUSTRAC is more focused. They look at financial crime, particularly money laundering and financing of terrorism. So when you read the undertakings, it seems that APRA's concerns were in the areas of liquidity, business continuity management and outsourcing, and AUSTRAC found weaknesses in the customer identification process and due diligence of those customers. But the common theme is that the risk systems weren't robust enough for a bank of this size and complexity. And tellingly, the regulators noted that some of the issues had been known to Bank of Queensland for several years, but had not been acted on appropriately.
Because now it's so important with any of these new online digital systems that you have the AML and KYC, isn't it? It's anti-money laundering and know your customer. So this is the particular area where the problems arose, were they?
Correct. With the AUSTRAC issue, yes, definitely. And the new platform, so we're told, will definitely address these issues and it'll be much more robust, but there's still the historical issues they need to deal with. So at the AGM, we are surprised to learn that there were problems in the flow of information to the board. So board papers were too long and important information was buried in detail, and they passed through too many hands, and by the time they got to the board, there'd been a delay and there wasn't enough time to assess the information. So being addressed now, but you could see how the board were flying blind for a period at least. So what happened? The regulators issued what's called a court enforceable undertaking. In simple terms, that just means that Bank of Queensland agreed they did the wrong thing and they'll work with the regulators to fix that up. And that basically means resolving the issues and strengthening their risk management process. And there are also consequences for the people who are identified as being responsible. So some executives were terminated, bonuses were forfeited, and the board members' fees were reduced. But most importantly, the shareholders weren't happy. So at last year's AGM, there was a 40% protest vote against the remuneration report, and that's called a first strike. If we fast forward a year, at this year's AGM, they talked about the programs they've put in place to address these issues. And those remediation programs seem to be operating smoothly, and there's clear accountability, and according to Bank of Queensland, the regulators are satisfied with the progress.
I just find it astonishing that the information flow with such important information wasn't getting to the board, and it was to do with a lack of clarity and communication and burying the bad news where no one would see it, that led to executives being sacked. Is it really what happened?
Well, that's the way it was explained to us at the annual general meeting, and I agree, it does seem extraordinary.
I find it astonishing, Paul. I really do.
Correct. Yes, normally if a board asks for something, in my experience, they get that pretty quickly.
So the second strike would have triggered a vote to spill the board. Did that happen this year?
No, it didn't. So it seems that shareholders are less angry with Bank of Queensland 12 months down the track. The annual report this year had a section that described the efforts the board had gone to address shareholder concerns. And that seems to have been successful because this year the remuneration report received about 90% positive votes. Because of that, there was no spill motion. But if there was a spill motion, ASA probably wouldn't have supported it because it's a very disruptive thing to do to a company and probably not in the best interest of shareholders.
You'd have to wield that kind of weapon very carefully because you could be completely destroying the company, couldn't you?
Correct. You can imagine how destabilising it would be to have the board all spilled and then potentially executives terminated because of the same issues. So yeah, it would be a fairly drastic step to take.
So back in October, when the latest results hit the presses, their shares hit a more than a 1.5-year high on early trade on because the lender posted a 130% jump in its annual profit, which sounds pretty impressive. But there's more reality behind the accounts, isn't there?
Yeah, there is. That 130% increase in net profit after tax looks impressive, but it was primarily due to a much lower level of one-off expenses this year. So last year, BOQ's results included a staggering $326 million in abnormal costs. That's including $200 million write-down of goodwill, $57 million for integrating ME Bank, $42 million related to those regulatory issues we discussed, and $35 million for restructuring costs. So this year, there were only $58 million of one-off costs. And so the year-on-year profits, that comparison looks really good. Personally, I don't think it was a good result. Like cash earnings after tax were down 24% to $343 million. And that drop was driven by competition for lending, higher funding costs, inflation, and investments in risk, technology, and compliance. Those things aren't going away. So at least for a few years, Bank of Queensland is going to face that increased cost base.
So on those numbers, though, do you find them as an investable company for shareholders?
I think most shareholders are attracted to the big four banks, and that's probably a less risky proposition than Bank of Queensland. Obviously, I'm not giving financial advice, but a lot needs to go right with Bank of Queensland for them to execute on their strategy. I don't invest in Bank of Queensland.
So you don't invest in Bank of Queensland, but you go to their AGMs?
Correct, yeah, as a monitor.
Yeah. You just take an interest in it, do you?
Yeah, I have an interest in technology companies and financial companies, so I tend to gravitate towards those for my monitoring.
Okay, what particular areas of technology are you interested in?
Well, this year I attended the Megaport AGM, which is cloud-based connectivity, and also Technology One, although they haven't had their AGM yet, but I've met with the company recently, so they're enterprise software. So there's two examples there.
Yeah, very slim pickings for technology stocks on the ASX, aren't there?
Correct. Yeah, it's not like the Nasdaq where there's lots of choices.
I was also interested to read about the bank warriors in the VIs. Who are the bank warriors? And they obviously ask lots of questions when they go along to these AGMs.
Yeah, the bank warriors are a volunteer group of activists who represent customers who've been unfairly treated by a bank, or at least believe they have. If you go to any bank AGM, they'll be there, and they're easily identifiable. They wear black bow ties, so they stand out. As you know, bank bashing is a national sport in Australia, so there's always a level of support for these bank warriors at the AGM. They ask specific questions about customer issues and the banking industry in general. And this year they asked so many questions that the first item of business took more than 2 hours, and I noticed that more than half the audience had snuck out to have lunch during it. So it gives you an idea of the amount of questions they ask. But I give the BOQ board credit for the way they handled the questions from the bank warriors. They were always respectful and they answered as best they could within the constraints of the AGM process. But obviously, they can't comment on specific customer scenarios because of privacy reasons. Some people, they get annoyed at the bank warriors and other activists, but I think it's an important part of the company mechanics that shareholders and their advocates can ask questions of the board in such a public way and get an answer.
Do you get the feeling that BOQ will ever become a takeover target by one of the big four banks?
For years and years, there was talk about BOQ and Suncorp merging and becoming like a larger Queensland-based bank, but obviously that didn't happen with ANZ buying Suncorp recently. And I suppose it's possible that one of the other second-tier banks like Bendigo and Adelaide Bank might merge with them, but I think it's probably getting harder and harder to merge banks these days, even though ANZ was able to get their their takeover of Suncorp through the process. It's not impossible, but I think it's getting harder than it was.
So you would encourage people and shareholders to go to AGMs. I mean, they are available, but not every shareholder is interested in going in them. Why would you encourage that?
I think it's an eye-opening experience for a shareholder to attend an AGM, because you can invest in a company and just see it as an investment that goes up and down based on the market, or you can see it as a company with people running it and issues that they're facing. And once you think of them as a company, it makes sense to engage with them as a shareholder and listen to what they've done during the year and exercise your right as a part owner of that company to vote at the AGM as you see fit.
And also give all your proxies to the Australian Shareholders Association if you are a shareholder as well, because even if you don't want to go and attend, the ASA will act on your behalf as well.
Correct. I mean, the more proxies we get, the more weight we carry when we ask questions and things like that. So yeah, I definitely encourage people to give us their proxy.
Fantastic. Paul Donoghue, thank you very much for joining me today.
Thank you, Phil.
Thanks for listening to Shares for Beginners. You can find more at sharesforbeginners.com. If you enjoy listening, please take a moment to rate or review in your podcast player, or tell a friend who might want to learn more about investing for their future.